Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are on Thursday, November 16th. We're going to take a look at AMAT today. So with earnings coming up, I thought we would take a look at where the price is on the chart, see any trend lines, support and resistance levels, to just have an idea of where it might bounce off of, where it might head based on earnings and the reaction to it. Now, the first thing that I want to point out is this long-term uptrend support. Now, it's quite far away from this at the moment. If it came down to this in the near term, it would be, sort of gliding in pretty tight with this 140 support level. So I don't know that this will play a factor, at least in the near term. But of course, if there's an extremely negative reaction, maybe, or if it kind of goes sideways for a while or just has, sort of what we saw here, really strong motion upward and then eventually sort of retraces a bit and then carries on. So I'm going to leave that in there, but I don't know that that will come into play particularly to the earnings reaction. Now, as far as that goes, boom, bust, or move sideways. Let's start with move sideways. So if it does have a relatively neutral / sideways reaction, I would look for it to kind of magnetize itself to this 155.91 level, which we could probably just call like 156 level. So it might, throw itself a little bit above, dip itself a little bit below, but, more or less kind of pinning itself to that zone or to that range and just kind of, sidestepping its way until it wants to make a decision. Is it going to move upward or downward, what have you? Now, if it decides to continue the boom that it's been on, right? It's been on a huge uptick. In just a few days, it's gone from 130 and pressed up closer and closer to 160. So if it continues to do that, to the upside, 160.38 is a level that I look for it to maybe get sticky at, and then 163.84 would be another level. If it goes beyond that, and with the stock being a bit on the higher price side of things, it wouldn't take a huge percentage change for it to get through that 163.84 level. If it does and folks are interested, I'm happy to come back and plot additional levels above that. Now, if it busts, coming down, there is sort of a fall zone. There's, you can see a few of the tops here, right? There's also a little gap here, which might provide some levels of potential support, right here around, say, 153, and then here around, say, 151. But aside from those, I feel like the stronger level, historically, 148.40. So just know there's some spread in between these levels because I didn't want to clutter the chart, try to keep it relatively clean, but that meant that I left out some of the levels that might be there, but might not quite be as strong, historically speaking. So 148.40, if it dips below that, either 140.03 or this uptrend support, depending on where it is at the time that it dips to that level. So those are sort of the levels that I'm going to be watching depending on what the reaction looks like. The other thing that I would just mention, this might be known, so just give me a moment. Like I said, huge uptick here in recent weeks. So sometimes when this happens heading into earnings, one of two things can happen. You just kind of have to wait and see what the market wants to do with it. One, it could be that it's a really solid call and really solid report, and the momentum that you've been seeing heading into earnings just continues, right? It just, folks let themselves get swept up like, oh yes, we were right all along. This is going to boom. Good thing that we are buying this up into earnings and look at how great it is. And that just sort of continues to carry the price upward. The other thing that can happen sometimes is you have kind of a neutral or even, a relatively good earnings report, and it can drop. And that could happen if folks kind of feel like either A, this is a good opportunity, this is a good catalyst for which I should take my profit, or that we've already priced in a bunch of this good news. So even though it's relatively good news, we're still going to sell off a bit because we kind of overpriced ourselves, kind of got ahead of ourselves with this run up into earnings. So I would just, be aware that those things could happen, and it could sort of follow what would feel like a non-logical progression based on a reaction because of this run up into earnings. Okay, On the think or swim side of things, because of this big run up, we've seen basically a move from the lower bound of the channel right after the TTM squeeze indicator was triggering and it fired, right? It did that right along the bottom of the channel here, and a really nice call out by the TTM squeeze indicator, and that, brought that, like we said, from that 130 up to the almost 158, and just huge bullish pressure, momentum coming in there, died off all of the bearish momentum that had been there, and really strong motion. That said, it is pretty far out of the channel for the time being. Now, stocks can spend quite some time outside of the channel. Let me see. We don't have a really great example of AMAT spending a bunch of time out of the channel, so that might be something in itself to think about. But if you look back here, for example, it came out of the channel for a few days, and what we ultimately look for is for it to come back and test the mid-range of the channel, that bright blue line in the center. Now, when a stock has pretty strong bullish momentum like we saw here, it'll come in and it tested the wave, right? It just tested the upper mid-range of this channel and was riding this wave until it came out of the channel, and once again, and then it came down to test the mid-range of the channel, that bright blue line. It held, it tested it again, and then it kind of gave way and it kind of wrestled with it a bit, and then it had this relatively erratic motion where it was bottom of the channel, top of the channel, bottom of the channel, top of the channel. So good motion within the channel there, if you're able to pick up on those things. But that said, it's much further out of the channel and sort of more sustained than we typically see in AMAT. That may mean nothing. It can, like I said, stocks can spend a lot of time out of the channel, but ultimately what we look for is a point at which they revert to the mid-range and retest the mid-range of the channel. So when that'll happen, I don't know, but something to just keep an eye on as things kind of play out here. But as it stands, histogram still showing increases in bullish momentum. This trigger and fire still seemingly playing out. So we'll see, if the reaction is a follow-through of the momentum, sort of a backlash from the momentum, or like we said, could pin itself into this range. It's higher than these recent swing highs for sure. And so it could already be in a decent position to just kind of consolidate a bit and see where it wants to go from there. All right, folks, I hope that you've had a good trading week. And as always, I appreciate you watching, and I will see you in the next video.